Been a tough year, though, for AT&T investors. Those shares down nearly 19% from their 52-week high. Today, though, Raymond James says it's time to buy. Analysts there upgraded it to outperform $34 price target. We've made it our call of the day. Brenda, you own it. Make the case for it.
So AT&T, one of the things that analysts points out here is that the stock is 8 times earnings. It has been trading at 8 times earnings for a little while. So this has been a frustrating element of the stock. I do think, we were positive on the Time Warner acquisition, and the company has taken measures to reduce costs. But we think we need to see more top-line growth and more subscriber growth to really get the multiple expanding from here and to be more in line with peers like Verizon.
It's cheaper than Verizon, and the yield is big, 6.7%.
Yeah, and when the yield was 5%, it was big, and then guess what happened? Without them raising the dividend, the yield's up. So you can make more money by losing money. I don't think that's the way to do it.
AT&T made much bigger bets in content than Verizon. Verizon's bets were not good. AT&T's are to be determined, but those are way bigger. Verizon had a big breakout in October, which we talked about here on the show. You had an inverse head and shoulders. Buyers came in right where they were supposed to, and that thing gapped up, has since not even seen that gap. This is now an inverse head and shoulders in AT&T. We'll see if it has the same result, but it's premature.
You own Verizon?
I bought it on that breakout, and if AT&T has the same setup as Verizon and that breaks out, gap or not, I would buy the same chart because I broadly like the space. I think this cycle, the 5G cycle, is good. I do like the fact that AT&T is being a little bit aggressive and still covering a very high dividend. So I would be a buyer. I just think it's premature technically. It could do another 2 years in no man's land and do nothing. So you wait on that breakout in these names.
Unless you're risk reward.
Unless you're in it for the income.
I've been in Verizon.
And you've made the case for Verizon numerous times.
I've been in Verizon for quite some time. Marty Walden, who's no longer at Verizon, came in, did a fantastic job on the technology side, diversifying the company and preparing it for what I believe is going to be the next catalyst. And that, I think, is going to be 5G. And I think they're going to do 5G better than AT&T is going to.
But I made the case before, and I'll make it again, Crown Castle. You want to play 5G? Yes. Play Crown, play American Tower.
American Tower, all-time high right now.
American Tower.
I own Crown Castle. I bought more recently. You've got
Look
a yield there, not a big yield.
I mean, it's unbelievable.
Anymore.
Look at that one.
It's a REIT.
And on the technology side for 5G, it's Keysight technology, which is keys, because the real 5G catalyst is going to be on the enterprise side, and that's who they're selling
Nokia.
Yeah.
Which you mentioned yesterday.
Yes, Nokia.
Motorola.
That's good play. Ericsson.
Motorola.
And to Josh's point when he was talking about AT&T and the possibility that maybe it sits here for a little while, right? I mean, maybe it takes some time. Meanwhile, if you are holding it at 6% and you're selling calls against that, Goldman Sachs had an unbelievable article out recently talking about the last 16 years overwriting stocks and the difference in how you do versus the rest of the market, the S&P 500. Those numbers are absolutely incredible, Scott. It's a great article. If you get a chance, somebody should pull it up. I'll try to put it out on Twitter. But that would be the way to play AT&T.